Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a great day. We're taking a quick look here again at Bitcoin. We're going to double check a couple of key factors here and just kind of see what's going on. Generally speaking, when it comes to sell-offs like this, they usually bottom out somewhere in the 0.618 fib level. We got a wick all the way down to that 62,700 mark. There's a solid chance we should see a turnaround here soon, but again, still a little too early to tell. You can kind of see that we're working our way into a descending channel here too, which oftentimes does break to the downside. So again, we could have seen that break right here with this candle wick down, but we're going to double check a couple of things. So let's just double check here quickly to note the back-end liquidation data. So we're looking at the overall liquidation for the last 7 days. And again, this is not a macro perspective, but this is just say within the last week, 62,700. What do you know? Right there where the candle wicked all the way down, we got that lower level liquidation here from, it's been a few days actually worth of liquidation at 62.6, as low as about 62.2. Okay, so 62,200, 62.6, right in that range, we can see some extra liquidation there. So wouldn't be surprised if we see one more candle wick down to this 0.618 fib level to effectively get that little bounce off that level, or just a normal liquidation sweep be right around that price range. So just a heads up, that could very well be a thing here soon. Okay, so we just got to be mindful of that, be ready for it. If it happens, great. If it doesn't, even better, right? So let's take a quick look at Bitcoin dominance just to clarify. We can see Bitcoin dominance is still pulling back. This is generally good and favorable for altcoins. So this is nice because a lot of altcoins are not getting hit super hard like they have in the recent past. So roughly a week or two ago, we saw some massive Bitcoin dominance increase that really set a lot of altcoins on a downward spiral. Since then, most altcoins have kind of stabilized and held at a decent range because of this. So just keep in mind that is a fantastic thing in the overall sense for altcoins. And just to clarify, all CME gaps have been filled. There's nothing too crazy here right now so far with that. So business as usual, if you will. Okay. So looking at the daily time frame, let's work our way down. And just to clarify, we're still working within our bull flag pattern. It's never perfect, but there's decent chances still the price should come up here to retest this upper range. But it wouldn't be surprising if the price pulls back even further. Okay. Again, you want to be ready for it because based on what we looked at yesterday, most everything was bearish. Okay, there's no other way around it. However, when we look at it here, again, we still have considerably low volume, so that's generally going to be a negative thing until we see an increased amount of volume. We're going to presume the price is going to continue to pull back or just have a weakness where it increases and it doesn't sustain its price action because of it. We got a nice little MACD FU. That is our third MACD FU in the past, since March 14th. So we're looking at about 6 weeks worth of divergence here. Never a good sign. Okay, so that's generally what we're looking at there for the daily 4-hour time frame. We want to clarify a couple of things here and just look at this bearish divergence. So we're below 50 on the RSI. Monthly index is very low. When you have that kind of situation, we can see a lot of times there will be a bounce in the relative near future. As we get close to 30 in the RSI, it's common for it to recover. We're getting close to that overextended state. So this is a bit of a consolation, yes, but also a positive. Stochastic swinging down as well, and MACD diverging. So there's literally nothing here that's positive, right? So I'm not going to sugarcoat it. It's a fairly trashy 4-hour time frame. And if we did take a look at the moving averages here, I'm curious about this. Kind of where we're at here. We're under the 50-day SMA, of course. Even still, that was kind of, we broke below that yesterday, so I'm not surprised there. But we do have, pretty much a bearish type of situation here. We're under all 4 moving averages. Okay, so until we can get back up over this 0.382 fib level, there at about 64,400, we're not going to be really in a good shape, or we're not going to have a good leg to stand on, if you will. Okay, again, this is kind of standard stuff here. Now, take a look at the hourly. Just to quickly note, we're going to see a lot of bearish divergences here. We're below all moving averages, lagging spans free and clear, and pretty much everything is telling us that if you have a short position open, keep it open. Okay, there's no other way around it. It's not looking good here, folks. I think there's a pretty strong probability we're going to see a lower liquidity sweep here at the 62.7 as low as 62,000. Okay, so that's that lower fib level here, that golden pocket, so to speak, between 0.618 and 0.65. So again, just some normal stuff. I would expect that to happen. If the price does rally back soon, great. But there's nothing in the charts here telling us that it wants to recover and turn around. We are starting to see a doji candle here. Keep this in mind, this can be a positive. We have a doji candle here with extremely high volume. Oftentimes when you see a doji candle near the bottom of a trend, a downtrend, and it's matched with high volume, it implies there's a lot of selling pressure, but equal amount of buying pressure. But that also tells us the bulls are kind of getting exhausted, and that the the bears are just looking to sell off as much as they possibly can. So all the more reason why we won't expect the worst and hope for the best. The price continues lower. We're ready for it. I would say the dip to buy here, if you were to, 62.7 as low as 62. I think it's 62,200. Okay, right in that range there. That's kind of where we're at there, folks. Again, it is what it is. Just get used to rolling with it, okay? Because if you're frustrated by this market, while it can be kind of annoying, this is really just normal manipulation stuff that occurs when a lot of fundamental catalysts are happening all at once. So we had a lot of weird things happen last couple weeks. So very, very choppy behavior and very difficult to trade. So if you've seen less signals on my end, there's a reason for that, okay? Over trading is a problem. Make sure you keep your trading to a minimum at this point. And again, wait for some stability before you decide to take a trade. Thank you so much for watching. Hope you all have a good rest of your day. Thanks again. Bye-bye.